Time for the word on Wall Street. Top investors watching your money this week. Joining me right now is Macro Trends Advisors founding partner Mitch Rochelle, Walser Wealth Management President Rebecca Walser, and Strategic Wealth Partners President and CEO Mark Tepper. Rebecca, kicking it off with you. We got markets trading mixed this morning. Investors are obviously watching earnings. Netflix reported first quarter results last night, reporting 4 million new subscribers globally. That was lower than the 6 million analysts expected. So the stock right now is down 8%. What's your take on the earnings season so far? Are you getting what you want to hear in terms of guidance for the rest of the year?
Well, not from Netflix. So I think the market overall has had a strong earnings season so far, Maria. But if we look at Netflix, if you look year over year, they went up 24% in revenue. But what we're really focused on is this net subscriber miss. Obviously, only just under 4 million when we expected 6.2. And they're now forecasting that we're only going to get about 1 million new subscribers per quarter. And if you go back and look at the trends, Maria, for when they add their subscribers, it's usually the first quarter of the year is the biggest add. So this is really disappointing that they missed such a big way in the first quarter. And what they're saying is the reason is the fact that the production of 2020 pushed everything back. They didn't have a lot of their shows returning at the beginning of this year like they normally do, and that will all be pushed to the end of next year, and then or the end of the second half of this year. And then it's not a competition thing. But I can't help but think, Maria, that Disney Plus and Comcast Peacock and all these other things are really starting to maybe compress the subscription growth of Netflix.
And they're going to need new content. That it requires more investment. Is the expense side of the business also a concern for investors then?
Well, content is king, and they're saying that if they get back, they've got their production schedule pretty much resumed, and they're saying they're going to spend $17 billion of free cash this year on the rest of the year on producing content. But their shows, the Stranger Things, the things that actually make people buy Netflix over anything else or in addition to anything else, they have to keep the content going, Maria, or they're going to have some serious competition really now, especially from the Disney side.
Absolutely. That makes sense. Mark, let's turn to the broader backdrop here, the economy, these inflation concerns that keep bubbling up. Procter & Gamble now is planning to increase prices on a number of essential products this fall, including diapers, among other things. The company says it's in response to higher costs of raw goods and transportation. Will inflation become a problem, dampening an otherwise pretty good growth story for the economy, Mark?
Well, I mean, what you're seeing right now is this is just textbook inflation. You have too many dollars chasing too few goods. That leads to higher prices. And that's what we're seeing right now. We're seeing higher input prices. Lumber's up 300% over the last year. So you're seeing home builders, they can't take it all on the chin. So they're starting to pass that through. Paper, pulp, and applied products, that's up about 25% over the last year. So companies are going to have to pass some of that on to the consumer. That could hurt. But remember, I mean, the consumer has gotten a lot of money over the course of the last year as well. So when it comes to Procter & Gamble, look, it makes sense that you're going to see probably mid to high single digit increases in those paper related products later this year. We all remember the toilet paper wars from last year, the empty shelves in the grocery stores. So Procter & Gamble has been the pandemic winner. And they continue to pick up market share, but they can't continue to pick up market share while putting pressure on their margins. They can't give their stuff away for next to nothing. And Procter & Gamble, this is a company with a very long track record of profitable execution, one of the best consumer staples you can own. And that's why consensus is expecting a 10% dividend hike in the second half of this year. So to get back to your question about will inflation hurt the economy? Will it hurt the market? It's going to slow economic growth, without a doubt. As long as economic growth remains higher than whatever the inflation rate is, and I think right now we're expecting above trend economic growth, and if you look at the PPI numbers, which flow into inflation, year over year, that's about 1.9%. So right now, economic growth does have the edge, but as inflation continues to creep up, yeah, it's going to slow growth, and it's going to slow this bull market that we're in as well.
Yeah, it's interesting because the areas that have been the pandemic losers are the areas that analysts are now looking for growth. So, Mitch, I'm talking about air travel. United Airlines reported lower than expected first quarter results yesterday. The CEO, Scott Kirby, though, said that international and business travel will not fully recover until next year. Some companies are looking forward. American Airlines announcing it's going to resume hiring pilots later this year. What's your expectation for the airline sector? When would you expect a normalization? And I guess it also has to do a lot with business travel. Will businesses want to send their people to conferences and get on jets again? And what about the international side of things? Do you have any visibility there?
Well, if you look, just sort of taking it, Maria, in reverse order, international, there's very few countries right now that the CDC and the State Department are saying it's safe to travel to. So I don't see that happening anytime soon. Business travel is going to be really hard. I think businesses, we're looking at earnings season, we're seeing how well businesses are doing. And one of the ways they're doing well is they're cutting costs. And, the typical corporate boondoggle, which I've been on many of in my life, I don't see that coming back anytime soon. And just from a macroeconomic perspective, the airline industry, and this is their own data, so it's a little self-serving, they say that the airline industry supports $1.7 trillion worth of the U.S. economy if you look at the airline industry and all the businesses tied to it. So I don't see business travel coming back anytime soon. They're operating at 50% capacity. I think it's going to be a long road with a lot of pun intended headwinds for the airline industry.
Yeah. Well, you're right, because most conferences are still now virtual, and they're still utilizing Zoom meetings and such to continue those conferences, but not in person. All right, we'll keep watching all of that. Mitch Rochelle, good to see you. Rebecca Walser, good to see you. Thanks very much. Please come back soon. Mark Tepper, you're sticking around all morning. Thank you.